Hello there. This is Bruce at Fleet Capital Management. It is Friday afternoon, 7th day of November, 2025. We're going to take a look at the markets, and I'm going to go a little bit in depth today because it's been a rough market. It's been a tough time, and I want to really dig in and show you what I'm seeing. We always start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. You know I am always available for you, Bruce at Fleet Capital Management. So, number one, and this is kind of a lesson. Whoops, that's not working. Let me try it this way. Now it's working. Okay. Some of you check your accounts all the time, which is fine. Some of you don't. But let me help you understand something. You probably shouldn't check your account during market hours. The close or the closing price is the only price that matters. And I'm going to show you this on the chart. And I'm going to show you why checking your account during market hours, especially in the morning, can sometimes be upsetting when there's no reason to be upset. So I'm going to come back to that. Just put a pin in that thought. November 3rd, I copied this. A wave of US layoffs flash early warning sign for the job market. You've got a substantial number of well-established companies making pretty big headcount cuts. That was a senior economist from Allianz. You might want to start wondering if this is random. I don't think it is. I think there are some serious cracks in our economy, and I think they're getting worse. But that doesn't mean the stock market's going to crash. Okay, I'm just showing you what's going on with the economy. And sometimes these pieces of news cause significant volatility, but we maintain the trend. Does that make sense? Let me say that again because that's important. Sometimes these news uh, flashes that come out on the economy cause significant volatility. And that volatility might be intraday, one day, it might be 2 days, it might be 3 days, it might be a week, but the trend continues. And I'm going to show all of this to you on the charts. Layoffs are already higher than for any full year since 2020, which obviously was COVID. So this is an outlier. You can take that out. But this over here, 2008, that was the Great Recession. Lehman Brothers went out of business. Merrill Lynch basically went out of business. They were forced to be purchased by Wells Fargo. This was very severe and very significant. And we're climbing into those areas now in 2024. So, yeah, there are cracks in the system. Is some weakness in the job markets. This is why I believe Chairman Powell has cut rates twice, even though he has some fears about inflation. US companies are declaring bankruptcy at the fastest pace in 15 years. Um, why is this happening? I think that there is no question that this is because of the tariffs, which we're also going to come back to in a minute. Here's something that I want you to understand. Don't try to make sense of this. This is a messy chart. All this is saying is, see that black line in the middle? That's the market. Okay. And um, and this was COVID. This was COVID. This was when the economy basically shut down. So kind of take that out as well. There are always reasons for the market to go down. Always. Here's another government shutdown back here. Um, Most powerful earthquake hits Japan. Chrysler and General Motors fire for bankruptcy. The BP oil spill. I mean, there's always reasons for the market to go down. But over time, the market goes up. And I want you to try to remember that. And that's what I was saying just a moment ago. News comes out and it causes fluctuations in the market. But does it interrupt the trend? Those are really two different things. And the more I can help you to understand that, the more I can help you reduce anxiety when the market's going down. Anxiety should be if we have a shift, a major shift in trend. That to me causes anxiety, and we have that early bear warning signal. So I'll show you that again. Business continues to be severely depressed. U.S. manufacturers blame tariffs. Everybody blames the tariffs. It's all about the tariffs. Everything negative that we're going through is about the tariffs. The tariffs are insane. Let's see what was next. This was from the Wall Street Journal. I think it was yesterday. Employers cut more than 1 million jobs this year. This was a report from a private consulting firm, shows a sharp rise in job losses in the first 10 months of the year compared with the same period last year. It's because of the tariffs. Markets are ending the week on edge as fresh labor data, that's all of the layoffs, and political uncertainty weigh on sentiment. Employers announced more than 150,000 job cuts last month, a 183% increase from September, making it the worst October for layoffs since 2003. The other lesson, okay, one lesson is don't look at the markets right after the market opens in the morning. And I'm going to show you that on the chart, the why. A second lesson is when news comes out, has it changed the trend or is it just causing volatility? Try to keep that in mind. A third thing to keep in mind when you see, and we've been talking about today, all of these layoffs, sometimes layoffs, which are horrible for people, are excellent for businesses. It reduces their spending and sometimes increases their earnings. I know that sounds horrible, but it just the way it is. Um, this is getting ridiculous. Air traffic control. This came out early this morning, and the number's already higher. It's already over 1,000. The government, the airlines have been forced to cancel over 1,000 flights because there aren't enough air traffic controllers and they're not being paid. So they're not being paid, and a lot of them are calling in sick because a lot of them have the attitude, and I don't completely disagree with them. If you're not going to pay me, I'm not coming in. These are jobs. The federal shutdown now becomes the longest in U.S. history. Amazing. Amazing. Um, okay, we'll get to Bitcoin in a second. Let's come back to this. So the two things that are happening that are incredibly negative in our economy is job losses and the federal shutdown. And that's causing an enormous amount of anxiety and uncertainty. And I've always told you this, that the markets hate uncertainty. If you were on the board of directors of a major company, Walmart, Costco, I don't care the name of the company, Caterpillar, Pepsi, any of them, how do you manage your business when you don't know what your costs are because of the tariffs? I'm telling you that the tariffs are causing everything negative that's happening in the country right now. And it is not hurting the rest of the world because the rest of the world is going on. They've moved past the United States, and Canada and Europe and China are doing trade agreements like you wouldn't believe. It's not hurting any of them, it's hurting us. Tourism down almost 50%, business spending down almost 50%. Las Vegas is empty. Las Vegas is empty because people from Canada and Europe who used to love to go to Las Vegas on a vacation, they're not coming to America. So that's a problem. Now, let's continue to talk about the tariffs for a second. You probably have heard, and maybe you haven't, that the Supreme Court of the United States, which most of us have very little respect for right now, has been hearing a case concerning the tariffs. And it looks like they are going to side against Trump in saying that they're illegal, that the tariffs are illegal. Now, let me give you a guess of what may happen. And I don't know when they're going to make this ruling. But if you follow the Supreme Court, which I do, and if you listen to any of the arguments, which I try to do or read them sometimes, it seems from an outsider's perspective pretty clear that the Supreme Court thinks that Trump overstepped his authority in imposing these tariffs. Now, if the Supreme Court rules, and I don't know when this is planned to happen, but if they rule that the tariffs are illegal, unconstitutional, whatever they call them, and must be paid back, some analysts believe that that's going to cause a huge bull run in stocks because these companies that have paid these tariffs are going to get that money back. And the tariffs will be over, and then they can do business as normal. Um, I don't know what the result's going to be, but when they make the ruling, there's going to be a major shock to the system. And again, most people believe that shock will be to the upside. I'm not sure I'm smart enough to know which way that's going to go. But, and I also don't think, I think that knowing what we know about Donald Trump is he will find legal loopholes to fight that. And we have way too many legal loopholes in our system, but that's what he does, and he'll try to fight it. So I just want to talk to you about tariffs for a second there. Bitcoin, which I sold, and when we get to the charts, I'll show you all of that. You see this dash line? This is a clear area of support. It went down, it bounced. It tested it again, it bounced. But if it breaks it, it could go dramatically lower. It broke it, and that's why I sold Bitcoin. But I am not going to be hesitant to go right back in, and I'll show you exactly what I need to see to go back into Bitcoin and to go back into gold. I think it's today. No, this was days ago. This is actually old. I forgot to take this off. We're way past 31 days. So, there have been some problems, and we're going to focus on the market. So let's go over here. This is what we focus on. And the first columns are daily. So that's the short-term volatility of the market. And there's been a lot of volatility in the market. It's creeping into the weekly charts. I'm not as worried about that right now, but it is creeping into the weekly charts. And then when we look at the MAs, this is very important. When it goes to yellow, and the reason I do it this way is so your eyes can just drop down and see, we're having a pullback. We are not having a correction. We're not in correction territory. We're in pullback territory. How often do pullbacks happen in any 12-month period? Well, the answer is 7 to 8 times a year. We're in a pullback. We're not in a correction. If we were in a correction, that's still not a bear market. How many times a year do corrections happen? 3 to 4 times a year. Okay. So the reason I'm saying this is don't think that the sky is falling when we're in a period that happens 7 or 8 times a year. Now, what you should focus on is this column. This is a critical column. This is our bear market avoidance indicator, and it's up. We're in a bull market. We're in a bull trend. Okay. The other thing I try to focus on is the VIX. Look at all this. We want green. Look at how much yellow and red, and I mean, we can go on and on and on. And this is the fear index. When people get fearful, they sell. So as the fear index rises, especially when it gets red and breaks 20, you can anticipate selling because people, that's kind of a throw in the towel type of a thing. But it bounces around. But if all of this was red in the weekly, yeah, we're got a problem. If the 20 crossed below the 50 and that was in correction, yeah, that's something to be a little bit nervous about. Is it going to lead to a bear market or not? Usually it doesn't. This is the line in the sand right here. It's right there. Okay? So let's go on. Let me find my chart. Okay, here's the S&P 500. First thing I said today is don't check your accounts early in the morning or right when the market opens. And here is why. Let me get rid of the crosshairs. You see this bar right here? That bar is today. And that little hash mark to the left is where the market opened. And when the market opened, it dropped and it dropped hard. It dropped like a rock and it broke the 50-day moving average, which we're going to come back to, and things were way, way, way down. Look at where it closed. It closed at the very top of the bar. This is the S&P 500, and as a matter of fact, the S&P went up 0.13%, even though it was down about 1.5% earlier in the day. So when it comes to technical analysis, the only price that matters is the close. That's what we use in technical analysis. We don't do intraday unless we're doing intraday trading. So this is a perfect example of why you should not look at the market, at your account, at, an hour after the market opens in the morning, whatever time zone you're on, because it can scare you to death. It can cause anxiety. It can do all kinds of things. We closed at the very top of the range, which is actually a very strong move. So that was one thing. Number two, if we look at coming over to the weekly chart, that green line is the 10-week moving average. The blue line is the 20-week moving average. This is our bear market avoidance indicator. Are they still both pointing up and to the right? That's a bull market. That's what a bull market looks like. Okay, back to the left side again. See that 50-day moving average? Look at how the last time it came down, went down to the 50-day moving average and bounced. Look at that. Today, it opened way below the 50-day moving average, which was pretty nerve-wracking for someone like me who's trading and watching the market every minute of the day, which I encourage you not to do. But look how much it closed. It respected the 50-day moving average again. Look at that. Isn't that amazing? And then this white line is a trading indicator that I use. It's very short term. It's 3 days. And when the 3 day crosses below the blue, which is the 20-day, I call that a pullback. And that happens somewhat frequently, 7, 8 times a year. We're in a pullback. If on Monday the market rises and that line crosses, I don't buy new securities when that crosses below. It could very easily cross back above on Monday, and we would resume the bull market. I hope that makes sense. This was the tariff shock. What was that called? Liberation Day. Yeah, it really liberated us. That's what this was, and that was pretty significant. But you know what? Right back up. So I'm just trying to help you see that sometimes when you feel like the sky is falling, it's not. It's just a psychological reaction to news. One more thing about that, and I'll move on. I have little to no doubt that institutions manipulate the market for their profit. They do it when news comes out. If there's big news that comes out, they know they can push the market down. I'm going to make up numbers for a second. They use $100,000 to push the markets down so they can buy $1 million in stock cheaper. Or they use $5 million to push the market down based on news so they can buy $100 million of stocks cheaper. So when news comes out and you see these flash drops, I'm suggesting that that's all it is. That's what they're doing. Unless we see a trend change. I don't see a trend change. I see a bull trend. I see some news and some government shutdown and garbage with tariffs that have caused this drop. Yeah, we had this drop, and that's unsettling. I don't like it. You don't like it. Have we had them before? 100 times. So I don't like what's going on in the economy. I don't like what's going on in politics. I'm sure you don't either. But we rely on the charts, and we're in a bull market. I want to go to Bitcoin for a second. Here's Bitcoin. Let's look on the daily first. So Bitcoin had been falling, and I was hoping that it was going to stop here. That was a reasonable expectation of support. You could see support, support, support. Then it broke support, came back up, support. So when it broke down, I was saying, okay, what happens the next day? It popped back up. I feel good again. It broke down one more day. I didn't like that second day, so I put a live stop. See that live stop? That's the red line. That's where my stop was, and we got stopped out right there because as it breaks through areas of support, there's nothing that could inhibit it from going, 40% lower, 50% lower. So I felt it was best just to take it out there. We had a profit. We've always had profits in Bitcoin, and that's what I did. Now, if you look at that little dotted line, which is right on top of my red line, the price closed today exactly where we were stopped out. Okay, so it's kind of a whole no harm, no foul. But I need to see that white line cross the blue line and probably the gold line before I go back in, but I'll know when to go back in. Another indicator I use is the MACD. The MACD is really low right now. When that MACD turns positive, look at that right there. Look at what happened. When it turned positive right there, look at what happened. So I have a lot of indicators that'll help me with that timing, but not right now. And you may say, well, it was up 2.83% today, and it was up 2% yesterday, and we should be getting back in. Well, sometimes those are fake bounces before it continues to fall. So we're going to wait until the chart tells us to go back in. Now, gold is a similar thing, but different. I put in a live stop right there, and it broke down, and I sold gold. And right this second, gold is actually a couple of pennies higher than our stop. And if you see this rectangle in here, green on the bottom, blue on the top, that is an area of consolidation sideways. It came down and consolidated, which means the next leg is either going to be up or down. I believe it's going to be up. And you see how the white line, which is the 3-day moving average, is just below the blue line. That's going to be really hard to see, I'm sure, which is a 20-day. If the white crosses the blue and the close is on top of the consolidation, I'm going to buy gold again. It's as simple as that. I'm going to buy gold again. So I just want you to know that when we get stopped out of things that have been great performers, I'll go right back into them. But I allow my indicators sometimes to breathe and to help us get a feel for, are we getting ready for a potential another leg up? Or is it going to break down and continue down? We never know. Okay. Another thing, BALT. BALT is an investment that I've used in group 2 and 3 accounts. When we went back into this powerful bull run, I sold it because we could make much more money just in the regular S&P rather than using the S&P inside BALT. If the price starts to turn back up, if the momentum starts to turn back up, and I expect this to happen pretty soon, I'm going to put a fairly large amount of this back into group 2 accounts and maybe a smaller amount in of this into group 1 accounts. Why would I put it in group 1 accounts? Because there's still so much uncertainty. But I think that the market's going to continue higher, and like I said, we'll see. What else did I want to show you here? Amazon, which we bought just the other day, we bought it right there, has come down a little bit. I've got two areas of support down here, and then I've got my alert stop. I'm not going to let it fall forever, but I think it was trying to fill this massive gap. You see that gap? It kind of opened. I mean, it closed and then it opened way up here. That was due to an earnings call, which was very powerful and very positive. I don't feel like we're going to have a problem with Amazon, but once again, I'm not going to let it fall forever. I have stops. I won't bore you, but I have stops in the market on every single security. Here's Nvidia, one of the greatest companies in the world. It's right above, you can see the dash line, and then the white line is where we bought it. We bought it here, right there, as a matter of fact. It ran up, and I thought, oh, perfect, perfect. And then it kind of hit a wall and came back down, partly because of tariffs, partly because of manufacturing. And it's probably going to hold this 50-day moving average and resume its uptrend. But I've got a live stop right down here. When it says live stop or it's red, that means I have it in the system. Price touches it, bam, gone. I don't have to do anything. I have stops on every single thing. Ethereum, I'll show you Ethereum. I have a live stop because it was falling, falling, falling. This is the 200-day moving average. And I thought, you know what? If it breaks that, out. We're done. We're done. You have to have a line in the sand. It never did. It bounced, came down a little bit, bounced again, and hopefully we'll be moving back up. So I just want you to know, I know that when the market gets crazy like this, it's unsettling. I understand that. I get it completely. But the way I keep my nerves calm, which they almost always are, is I look at the chart. I look at the chart. Are we in a bull trend here? Are we in a bull trend? That's the S&P. Yeah. There's no way you can say anything but yes. I'll go to the NASDAQ. Is this a bull trend here? Yeah, it absolutely is. Do I have a live stop right around the 20-day moving average? Yeah, I do. Because we have such a good profit, I'm not going to let it go all the way back. So I'm managing this. I'll take care of this for you. I hate when the markets go down. I hate when account values go down. But just ask yourself, is that short term? Is that normal? Is it a regular pullback? Is it worse? Is it a correction? Those are really painful. Or is it a bear market? A bear market is a whole new ball game, but corrections and pullbacks happen inside an uptrending market. So I know I've belabored this. I hope this helped calm some nerves. If you have any questions at all whatsoever, all you have to do is shoot me an email or hop on my calendar. Very happy to talk about all this, but I'm going to be doing, I actually have a lot of paperwork on my desk right now, which I don't, whoops, the camera's not picking it up. I'm going through every single account this weekend. I'm looking at cash positions in every account this weekend. And I will probably be making some trades early next week because I think this thing's going to reverse itself unless something unforeseen happens. This shutdown is going to end because it has to, or we're not going to have an air traffic system and we're not going to have a lot of things in this country. Um, that's going to end. I don't know what's going to happen with the tariffs, but it's at the Supreme Court right now, and they don't seem very happy with what they have seen from Trump's lawyers. And so there are some very positive things that could be happening soon, I hope. But we are in a bull market, and we're going to be careful, but we're going to keep responding as if it is a bull market. So that's the story. Have a great weekend. Hopefully, fall is beautiful wherever you are. It certainly is here in the Pac Northwest. It's absolutely gorgeous. Enjoy the fall, enjoy football and sports and the seasons, and go out for a walk. And if you need me, I'm here. Just call me. I'm always around. Okay, talk to you soon. Bye bye. Enjoy your weekend.